How much is oil and its gyrations playing into these market volatility?
The Fed tells us they see through it, and I hope they do, because right now oil and other commodities are holding down exactly the problem that we're facing, which is lack of inflation. What I'm afraid of is if we get a hint that this is getting embedded into wage setting, that may actually take much longer for inflation to turn around. Now, it's still almost
like... How will we know that if it's getting embedded?
We don't know. There's so much uncertainty in what's going on in the labor market. The links between labor market increases and price increases have always been a very weak one. So we are really facing this great uncertainty. That's what I think the challenge is for Fed.
I want to take what you do so well, Bill Lee, with your IMF experience as the global view. Here's Ed Morse, on oil from his important Citigroup note. The oversupply hanging over markets is likely to be short-lived in some commodities, especially metals, where new supplies are far more limited. Crude oil prices are testing new lows for the year and even takes it out into 2016. This morning, disinflation and outright deflation in Japan. We saw French PPI deflation. It is Lagarde's new mediocre, isn't it?
But one thing the U.S. has going that everyone else doesn't is that we actually have a rising growth rate. We are expecting the economy to improve. Output gaps are supposed to be closing, and they are. We're growing at well above potential. Why? Because potential is only 1.5%.
But with policy and looking at the trilemma of international economics, Ike and Green with us later of Berkeley, the idea here that they will impute their deflation and disinflation over to our stronger economy. Will that occur?
I keep hearing that, and yet when we actually look at what's going on, most of that imported deflation or disinflation is coming through goods prices. But where are the service prices, which accounts for...
I looked at that chart yesterday.
And it's over 2%.
Can I do this on a Friday? Services, goods.
We can't even see the bottom one.
It's that simple.
It's that low.
It's that simple. Yeah. And where do we care about inflation? Where the services are, because that's the core set of non-traded goods prices and service prices that the Fed's going to be worrying about 2 years from now.
Why isn't the oil dividend getting passed on then into wages?
The research I've done shows that the marginal propensity to consume out of income has dropped tremendously. Why? Because the quality of income growth has dropped so much. Most of that income growth is coming from these low-wage sectors.
That was he's like 0 for 2 on jargon alerts this morning. No, that was Regan that did Gamma. Marginal propensity to consume is the responsiveness of consumers to an oil price drop? To
increases in income. And where's the increase in income? From the lower oil price.
Why didn't they spend it at Walmart?
Because they've gotten cautious. Consumers are much cautious today than they were before because of the uncertainty in their job growth and uncertainty in the type of income they'll be earning.
How can that be?
It's the producers that are not passing it on then. It's corporate America that is not passing on the dividend.
No. I think without a doubt that gas prices are lower, gasoline prices are much lower. Now, you could argue the crack spreads are a little bit higher. That is another jargon alert. The difference between gasoline prices and oil prices, well, a lot of that is because refineries have had a lot of outages. So that's been a technical glitch that's held up gasoline prices more than they would have otherwise.
Okay, Bill Lee with us with Citigroup.